What's good, $grind fam? It's your boy Shaq with a $, and welcome to Backtesting Diary entry number 4. This time I'm going to be doing a walkthrough on how I approach the pre-market setup. What am I looking for? How do I find that buy, not the buys, but how do I find that area of reaction? How do I find the breaks of structures? How do I gauge or find that extra confluence that makes me or allows me to say, I'm going to take this trade? I feel like this breakdown is going to help somebody. So without further ado, let's get right into it. First things first, what I like to do is I trade the 5-minute, obviously supply and demand. Those are the setups. I also trade liquidity grabs, a little bit of support resistance, but from a typical point or a straightforward point, we're going to stick with a supply and demand type of ideology. So first things first is I like to look for any areas from the 1 hour or even the 4 hour, not too much dailies unless you're looking for all-time highs and all-time lows, but more so from the 1 hour and the 4 hour. I look for areas where price showed me some sort of reaction to, or an area that price is approaching that price has tried to or failed to break through. So prime example, right now we have this 1 hour support resistance area happening right here, right? Price failed to break through this multiple times. We're now going to go to the 30 minutes to see, are there any breaks or structures happening? Is there anything that's telling me that price wants to buy up to that area, or is there anything telling me that price wants to continue to drop? We're going to see. Let's go to the 30 minute now. Now, from a 30-minute standpoint, we're seeing price is doing this area of, or this little kind of support resistance, but we don't know yet. The only thing that we know that price has failed to kind of break through or has reacted from is this area for sure. We also know that we have a 30-minute demand here with breaks of structure happening to the top. Now, am I saying that I'm going to take a buy off of this demand? No. What I'm saying is we're seeing this happen. So if price gets down to this area, I'm going to wait until price shows me or breaks or does something strong enough to confirm that this is no longer valid. I am not going to take any sell. I'm not going to say I'm not going to take any. I am not going to be confident taking the first sell that happens at this area. I'm going to want to wait to see price either fall or break through this area that it failed to break multiple times, or price to break through this area. If price was to break through this area, I'd be content to look for a possible scalp down to this. But I am not going to say price is going to break this and then break this. Price could break this and then react. All right, so now let's go to the 15-minute. See what happens. Now we're going to start getting into me actually looking for setups, right? So from a 15-minute, well, the 1 hour to 30-minute, we have an understanding, okay, that price has broke structure to the top. Price has also left an area of support resistance, as well as a 30-minute gap and a demand that price could want to react off of. Let's see if we can add any extra confluences. I'm going to now turn on my moving averages. Break that down. So on a 15-minute time frame, right, we understand that price is under the 200, and if you've watched any other webinars or any of my other backtesting diary entries, you already know that when it comes to the 200, I trade away from it. Price needs to break above and then break it again for me to trade the opposite direction. If price breaks once, I'm not going to take it because anything can happen. The 200 is a strong moving average. Price could go sideways or break it and then give me a fake out. So we like to be patient. So on the 15-minute, we understand that we're below. I am not going to be content to take any buys yet or look for any sell. I am not content to say I have found a setup just as yet. So we're going to keep on. We're going to go down to the 15-minute. Now, I've seen on the 5-minute that we broke structures, right? We had a break of structure here. We also have a higher high here, right? We have a 5-minute little area, a low prob 5-minute demand. We're not going to take because we don't take low probability, but we see that, okay, price is showing me that there is some sort of buyer's reaction happening, as well as we also know, if you look now from a breakdown analysis, that we have a area of resistance / support at the top, as well as a gap sitting here. So in my mind, my mentality, I'm going to say, okay, is there anything that happened? Is there any area that price may want to come back to, fill and check, or take liquidity out to continue going? Let's see. We have this breaker structure to the top, so I don't mind looking for a demand or looking for a buy to the top. This being the most I'd be willing to hold my buy to. But once price hits 1-to-1, we're gonna take or if price hits 1-to-1, we take our profits and let the runner run, and it could end up closing at a break even. It is what it is. But so we're gonna look at it. We have a 5-minute demand here that price came back and reacted to, but sitting there as well is liquidity from the 5-minute. So what I would like to see from a reactive standpoint is for price to push down, react off of this area where price initially broke multiple structures and push. So we had a breaker structure here, we had a breaker structure here, so price broke 2 structures and then continue to push. We also have the 200 moving average and the 50. So what I would like to see is for price to fail to break the 200 and this area, and then possibly we get it on a buy. If price fails, or if price breaks through, right? Remember what I said, this right here is still a 30-minute demand, and we also have this 30-minute area of reaction. So if price does break through it and then breaks again, I would be content taking the sell down to this area. Remember what I say is we react. We do the top-down analysis to get an idea of what price has done, to kind of gauge what price is trying to do, but what price is doing in real time will always hold more weight than what price has done, right? So if price is able to break down or break below this area here, we're going to look for a sell. If price is able to react off of this area, i.e. push off, wick off, we're gonna look for a buy. Very simple. Let's see what price does. And remember, I'm not saying price does what it wants. So price could very much so push up and then come back down next year or next month, or even in this very minute. Price could push down, and we don't know when, but this is what we're expecting, this is what we're hoping for. So again, price never came back to that area. It is what it is, right? We don't chase a setup, we look for prime and clean setups. But now if you look at, remember what I said was I would be inclined to look for a buy from somewhere down here to push up to fill this gap on the 4 hours / 1 hour. So what is this? This is the 1 hour area. So this is the gap that I first broke down, right? So I would be content to look for something to fill this area. But once it filled, I would not say I'm going to take a buy. This is a 1 hour. Anything could happen on the 5 minutes before it decides and tells me what it wants to do. Get what I mean? So we're gonna not take anything yet. Simple. And we're gonna see if price wants to fill, which I'm pretty sure it does. So price filled with this wick, tapped in. What you could do at this moment is if price wants to break below, you can get it on a sell down. I don't trade like that personally because I like to trade with the trend. I am not saying that trading against the trend does not work if you know how or what you're doing, but I will say that from my standpoint, I psychologically do better trading with the trend. But for the hell of it, we'll throw down a sell position down here, 21 pip. This might now become like give me a second, sorry about that. There you go. Yeah, this might become like a swing trade / day trade style idea. Again, I don't trade that. I trade 5 minute supply demands. I want to get in and out, but for the hell of it, let's see what happens. Does price want to push down or does price break through? And if price breaks through, it is what it is. That's why I don't really trade those. But price obviously broke through. It is what it is. We don't trade that. But now, let's just say with price breaking through, right, and closing above, what will we be more inclined to take now? Right? The idea I just put down was just in like shits and giggles if you want to trade against a trend, which I don't necessarily advise with. Unless you're willing to take the risk. I am not, so I tend not to do it. But what would you be more inclined to take here? If you look at it, prices failed to break this area multiple times and broke through it now. So now my bias, not my bias, but my reactive standpoint is, okay, where could price want to come back to respect and then come back to react from? We have a 5 minute demand here with a gap. We also have this area of liquidity sitting down / support resistance sitting down. Let's see what happens. Let's put this down to the 1 minute. Let's see if price. So price wicked off. Will price give us the entry? And there will be your entry right there. So I'm not gonna take this trade obviously because it's 12.10, but that right here when price broke would have been your entry. We don't know what the results will be, but this is how I approach the markets. In reality, I look for what area on the 1 hour, what's happening on the 1 hour. Is there an area of support resistance? Is there an area of an all-time high? Is there an area of reaction that price, or even a gap, has price gap and needs to come back to fill this area? This is what I look for. Then I go down to the 30-minute and say, okay, now where are the breaks of structures? Are the breaks of structure happening on the 15 or the 30? If it's happening on the 15, I then go down to the 15 and find it. You have to find that area of a break in order for you to gauge what's happening with the markets. And then as you go lower, you start to turn on your moving averages. But if you notice, again, I started from a naked chart standpoint because I didn't want any other bias or anything to tell me what's happening. I want to be able to deduce it on what I see. And by what I see is exactly, in a sense, what occurred, right? Price showed me this area failed to break, right? Price came back or came close to testing that area. This was like a pip. What is this? Not even like a pipette to a pip away from wicking off. Had price wicked off, we would have got in. But again, that's a shoulda, woulda, coulda type thing. We don't necessarily always get the setups we want. And when a setup happens, right, or it does not happen, we don't just jump and take any other setup afterwards. I showed you an example. Obviously, the example lost. It is what it is. But in reality, had that setup not come through and my trading time closed, I wouldn't have taken the setup. It is what it is. You know what I mean? But from an analysis standpoint, this is how I view and gauge the markets. I start at the 1 hour to the 4 hour. I look at areas that price might want to react to or has reacted to in the past. I go down to the 30 and the 15 to look for breaks of structures, be it to the top, be it to the bottom. I then go down to the 5-minute, right? Pinpoint a clean break of structure. And then I turn on my moving averages to now be the confluence. Is my moving average contradicting what's being said to me? If so, I wait for them to align. Get what I mean? As always, it's your boy Shaq with $. I am so thankful for the fact that we are on backtesting diary entry number 4. It's been a long and a hard journey for the last two and a half years. We've just been grinding. This is my first year or first month, 2 months doing this series. So we got a lot to learn myself. But man, every single day, every single video, every single trade, we get better. And just to kind of be transparent with you guys, right? Obviously, when you look at multiple other traders in this space, they're having 10K, 20K, 100K, etc. amount of views, right? This is why I stress to you guys even, do not base your journey on anybody else's. Because if I was to do that, then this process would seem to me like almost pointless. But honestly, because I am on my own journey, on my own path, me seeing 20 views, 40 views, 30 views, man, I'm doing good. Like, I'm proud of myself. It deserves a medal. You know what I mean? We have more way to go. But because I'm not basing my success off somebody else's progress, any small step forward that I take, I relish. I'm happy about. Same thing with trading. You might not be making $1 million a trade today. You might only be making $10, $1, $50. You might be losing $100 a trade. But you relish in the things that you learn, and you are content in the small wins that you may have. Because those wins, if you don't give them the respect they need, you'll never respect the big wins, right? Championship teams, they practice and they take every single thing they learned in their practice to the finals to possibly win that medal. But they can't win that medal if they didn't go through the trials and tribulations of the season. You know what I'm trying to say? So we in the season. My season different from yours, but I relish in the fact of my small wins. As I will tell you, if you win $1 today off trading, you win $3 today off trading, congratulations. Keep going, keep growing, keep striving, because we got this. As always, it's your boy Shaq with $. Peace, love, and prosperity. Peace.